Okay, well, welcome everybody. Thank you for spending your evening with Foothill Credit Union. As Stacy had said, my name is Michael. I'm the consumer lending supervisor. I have about 20, just over 20 years of consumer lending experience, from reviewing credit to taking applications and everything in between. So what we want to do as Foothill Credit Union, empower our members for whatever stage of their life they're in, right? Are they just starting credit? Are they rebuilding credit? Are they looking to maintain their credit, right? Because there's so many things going on with credit. It literally can change overnight. Your score, with little transactions you make can really shift that number. So we want to visit from beginning, middle, and end, as we stated, from starting credit, improving your credit, maintaining credit, and everything in between. As Stacy said, if you have any questions, some may be refresher for you. Some of the things we're actually covering, but if you want to go into more detailed, more specific questions to yourself or a friend or generically that you heard, don't hesitate. Pop that in there, and I can review those as well. My contact information will be at the end of the seminar. If you feel more comfortable reaching out to me personally, or as well just an email, I'm more than happy to address them that way as well. So our objective today is why is good credit important, right? We want to ask these questions to ourselves, right? The significance of credit reports and score. Now, like we talked about, how to establish credit, how to maintain and improve your score if you currently already have a FICO score. The pitfalls that could cost you, right, in credit. There's a lot of things that can cost that score. Your rights and responsibilities of having a score, and as well as maintaining that score. And kind of, as people that have credit scores, we actually have rights to that as well. And we'll kind of go into that as well. So these are kind of just the objectives of today, what we want to touch on, and an overview. So with that being said, is what is a credit score, right? From the Jumpstart, right? It's a score that really holds a lot of power, right? The only thing that's basic in a credit score, I would say, to understand is the higher the score, the better; the lower the score, it worse, right? And then you have that FICO from 350 to 850, and everything in between. A lot of people are in those in between areas, but as well, the upside to a credit score is it's not a set in stone number, right? It's not a number they say, hey, this is your credit score, and that's what you have to deal with, right? It's actually could grow with you, right? You can strengthen that credit score, but as well, that score can decrease. I've met members that, say, hey, last time I checked my score, it was 700. And then now it's not that anymore, right? And they're like, what happened, right? So we kind of want to go into that, what happened, right? There's a lot of things that can change that, right? It's like we say, that 3-digit number that holds a lot of power. What we always like to say, whenever you're taking credit, we want you guys to always ask yourself this question is, how likely are you to repay this loan, right? Because this number, it determines your credit worthiness, right? So it's telling lenders, okay, is their FICO score 350 at the lowest end? Is it 650, in the middle, or is it, up to the 850? So it's really determining your payment history, how you've paid other loans in the past, how you use your credit, as well, how you manage your credit, right? Are you always maxing those cards out? Are you using those on your day-to-day to kind of get through your life on the day-to-day? Can you really take on more debt right now? You're looking to purchase a vehicle, right? Is there, a certain cash flow on that credit report and that score that will tell us that you can take on a lot of credit, additional credit, right? So we talk about that score of, 350 to 850, but a lot of times people don't take the time to break down the actual credit score, right? It's like, what builds this score of 850, right? A lot of time in the industry before, we would say, hey, you know what? It's very hard to really figure out what the score is based on, right? It's like, well, this is your score and this is your rate, right? But a lot of information then go into, okay, well, how is that score built? Why is my score this, right? Because it's very hard, even if you were to contact the 3 credit bureaus, Experian, TransUnion, and Equifax, those are the 3 major bureaus, you may have a different score in each bureau based on how lenders are reporting. Sometimes you take out a loan and they don't report to all 3 bureaus. They maybe only report to Experian. So your Experian report may be higher than your TransUnion report, right? Or some people may report only negative to TransUnion, not in your Experian. So you see that your Experian is higher. So it's very important to really know that if you have a credit score on one bureau, it doesn't mean that it's going to mirror it all throughout the rest of the bureaus. It's very important to really look at to see what's on that score on an individual basis. So when we look at that, what builds a credit score, right? 35% of your credit score is payment history, the basics. Do you pay your loans, right? You took out a loan, are you paying it, right? That one's pretty straightforward. The other one, amount owed, or usage available, right? This one is a little tricky. We get a lot of members that say, hey, I have my credit, but I pay everything on time. Why is my score so low? What happens is because members are using that credit score, the limit over the 30% mark. So if you have $1,000 limit, really the Bureau doesn't want to see you taking that over 30%, let's say $300 in a $1,000 credit card, right? Because that leads them to believe that maybe you're overextending yourself every month, right? So just because you're paying all your cards on time, but you're always closer to that max balance every month, or that line that is allotted to you, that is actually having a negative impact on your FICO. Yes, you're getting the 35% based on your paying it, but if you look, almost as equally important is that 30% of how you're using it and what kind of balances do you have on that, right? So very important to really make sure that you're not maxing out those cards, and take that into consideration when you're making payments, right? You're going to send who's going to get the larger payment this month if you have some extra money, right? If you really want to focus that on the card that may be approaching or over that 30%, right? Along with, the interest rate and things of that nature. But from a credit scoring factor, that's what's really important. The length of credit history is 15%, right? So how long have you had credit? Is it new credit? Do you have you had it for an extended amount of time? The longer the longer that you've had credit, it's a bigger snapshot that lenders are looking at because we have a more amount of information to look at, right? So you have 3 years of credit and somebody has 10 years of credit, their score may be higher because they have more length of credit history, right? The type of credit usage. Do you have a good mixture of credit, right? Is it all only store credit cards, right? Or do you have a major credit card from a financial institution? Do you have a home loan? Do you have a car loan? So there's unsecured and secured loans, right? Secured loans are something that is securing the property. So is it a home that is secured, right? So do you have a home loan? Different. Do you have an auto loan? The auto loan secures that loan. Or do you just have a lot of credit cards, right? So having a good mixture of credit is still 10%. And then new credit. Are you taking on new credit, right? It's a positive. You really don't want to, this was a tricky one too, because you want to take on too much credit, but you don't want your credit to become what they say is dormant, right? So that you're just not using it. Because again, then it doesn't give any lenders or the credit bureaus to really get a snapshot of how your recent credit is looking, right? Because the last time you used your card was a year ago or 2 years ago, right? A lot of members are like, well, I didn't have to use it, right? Which is good because you get all these other factors, 35, paying it down 30%. But that 10% new credit is not, you're really not gaining that, right? So it's very important to understand that these are the components of a FICO score. Again, 35, 30, 15, 10, and 10, really breaking those down and say, okay, these are my bills. How do I approach paying these bills or building that credit, right? So very important. Now, what is a credit score again, right? Not just a credit score is not just a number that for lending, it also has identification information, right? Employment history, right? Credit and payment history that we talked about, bankruptcies, judgments, liens, inquiries. How often are you trying to get credit, right? That's another thing. Are you having a lot of inquiries on your credit? Are you always applying for credit and getting turned down, or just taking on too many, right? Your consumer report, right? That you can request at all times, right? What you have to remember is with a credit score, a positive credit score, it's the differentiator of paying a really, really high interest rate, like in our standpoint, our auto loans are as low as, 1.65 with a powerful credit score of 720 and 730 and above. But then they can go as high as, 15.5% with people that maybe aren't as set in their credit score. So it's very important that it saves you thousands and thousands of dollars to really, really pay attention in the long run of how much money you're really saving over a term, right? So we roll into that. Why is that important to build good credit? It determines your eligibility, like we said, on auto loans, home loans, right? And a lot of times people don't realize, but it also determines your eligibility on a lot of employers pull credit nowadays to see, are you trustworthy? Are you overextended? Is this depending on the type of job you have? Is this someone we could trust around money or, things of that nature? Even, if you're looking to rent a property right now, right? Want to rent a house, they typically run your credit, right? They say, hey, what's the credit score? Are they financially stable enough to actually just even rent this property, right? Student loan rates, so it's very important that you really take the time to break down this score. And like I said, it's a score that can change with you and that you can doing the right things, you can get back up. But it's really going to determine a lot of these key factors in life that you need. It's that gateway, right? It's your key into a lot of opportunities. It's not just on lending standpoint. And we talked about that interest rate. It's determining that interest rate, which interest rate equals money saved, right? So it could be thousands of dollars difference in a actual loan that you're looking to take. So it's very, very important to just kind of take a step back, slow down, really determine, okay, is this something that I can pay? Is this a debt that I want to take on right now? Am I making all the right steps to kind of get me in position to buy that new car, take out that new credit card? But again, it flows back into understanding what I have to do to build that credit. Now, we talked kind of about what a credit score is, right? But it's a lot of people, we all always like to say, especially when you're just starting out, it's like you have to have credit to get credit, right? So a lot of people get discouraged about that. They're like, well, how do I build credit, right? I don't have anything right now. So how do I build? Or I've had some rough credit in the past. So how am I you're going to keep that, right? So building credit, you want to start small or on a small loan or a line of credit, right? Maybe a secured loan, right? So a small loan would, sometimes you have members that are looking to build credit and they ask for a very large amount, right? And they may get turned down or countered and because they're like, well, I'm just trying to start credit, but you really want to start with a smaller loan. So to show that you're taking it on, there's buy-in, and as well that you're committed to this amount, right? You're not asking for this huge amount if you don't have anything to compare it against, right? As well, we talk about that secured card. A good way is we actually offer at Foothill a secured card where you're pretty much lending your own money at a low interest rate. We put the money on hold. We give you a card form. The amount of money's on a card. You use it as at your will. You pay it, and we report to the credit bureaus to actually, help you build that FICO score on a consistent basis until you're ready to convert that to a regular credit card, right? But in the meantime, that money that you have in your savings account that is just sitting, you lend against it, at a low interest rate, and then you build your credit. So it's a win-win with a low interest rate, but as well, and that main thing is building that FICO score and strengthening that credit. Another way is, the department store, gas cards, things like that are more likely to lend to you. But the only thing is it will build credit, but you got to be aware of those, those interest rates for store cards, right? The average interest rate for a store card is 25 to 30%. So you really have to make sure that, if you have the ability to maybe do a secured card to build it, great. But if you don't, maybe you want to take on some smaller debts just so that you can, start building that number until you get a little more comfortable to showing lenders that, hey, look, I have credit. I'm able to build it. and I'm trustworthy, right? As they say, because that's pretty much what, when you're looking at a credit report, it's your story, right? We look at it, we're looking at your snapshot of your story on there, based on your credit history and your payment history and your debts. And we say, okay, can we take on more debt? Can this member can take on more debt at this point, right? Another thing is use a cosigner. If you have the ability to use a cosigner, do it, right? Because a lot of institutions are you're going to get the benefit of the higher FICO score that maybe your cosigner has. We take the highest score because we want to see you have the lowest rate possible. So with a cosigner, they will actually, you'll get the option of having that low interest rate instead of taking that 0%, showing no credit and having that higher interest rate as well. So if you have ability of a cosigner, that's awesome as well, because that gives you the opportunity to take advantage of their score as well. One other thing that I wanted to address as well is be an authorized user. If you're looking to build, I know we get these from a lot of parents, how do I build my kids' credit? Add your child as an authorized user, right? If they are added as an authorized user, they immediately start getting that benefit of how you're paying that loan. So if it'll show that they have credit, even though they're just an authorized signer on that credit, you're going to see their scores increase. We have members that turn 18 and they have an 800 FICO score because their parents had add them onto as an authorized user on two or three cards. So there's already a snapshot of what we could look at on a payment history for the bureau. So they're actually scoring them instead of not having anything and just starting at 18 to take a card, right? Another thing is, if you're looking to, especially when it comes into purchasing a home or purchasing a vehicle, do you have any down payment? Is there a large down payment, right? Because what a down payment tells us is that you have some skin in the game, right? You're committed to this loan, that if, times got hard, you're not just going to walk away from it, because you've actually put in some money, you've saved up, you've done the legwork, you want to put some money down on this vehicle or this home, and it shows that, hey, look, I'm committed. I did my part. I stuffed money aside, I saved. Now I'm coming to you as a lender to say, hey, can you help me out with the next, right? So it's very important to, like I said, I know sometimes you take that and it's hard you're like, oh, I can never get credit. If you're looking to build or rebuild your credit, these factors could also come into, especially with the secured credit card again and the large down payment. Things of that is going to help you get your foot back in the door if you're looking to recover your credit. But it's very important that you take a step back and you say, hey, this is how I build credit, and don't get discouraged because you've got turned down for a card here or there. It's let's go down this road, right? So again, how to maintain and improve your credit, right? Let's kind of revisit these, right? One, pay your bills on time, right? As we know, that's that 35%. That's going to be the key factor of, okay, paying your bills on time, going to the next step. Do not max out your credit cards. Remember, that's that 30%. And that's a tricky one, because a lot of people think, hey, I'm paying it, so I should have perfect credit. But in reality, that's not the case, right? Stay within your credit limits, right? Those kind of piggyback, right? You don't want to max them out. You don't want to go over your credit limit, definitely. And you don't want you want to stay, don't want to go over that 30%, but also you want to stay in that credit limit, because a lot of organizations, what they do is they let you go over your credit limit, but at a higher rate and maybe a fee for overextending your credit limit. And again, that's going to see one of those things that you're going to see an instant decrease in your FICO score from one month to another, if now all of a sudden you're over your credit score or approaching that credit limit, right? Another thing is, keep older accounts open. A lot of questions we get is members talk about, hey, you know what, I'm not using this card, I'm just going to close it out. Again, remember we talked about the longer history. So the longer history you have with credit, bigger snapshot for lenders to look at and the bureau to score you on. So longer credit history, I always say keep the line open. If there's no annual fee or there's no anything, there's anything on there, you really want to make sure that's accurate, right? We'll touch on this one. Be cautious when co-signing. Again, we talked about co-signing being being a positive, right? It's a great thing to get a cosigner, but again, it's important to really know when you're co-signing for somebody that you really want to make sure that you realize you are responsible for that loan, right? It's not just, hey, I co-signed for them. It may hinder you from moving forward in something that you're looking to do as a co-signer. Another thing I like to touch on is that Experian Boost. That's one of the newer thing that's out there in the industry. There's tons of commercials about it. It's specific to Experian itself, right? It's that one bureau offers a boost to your credit. And if you see a lot of these commercials and things on social media, hey, we can boost your credit. A guy gets all excited, or a gal, my credit score went up 20 points. And like, how does that happen? What it is Experian lets you report your actual like utility bills, right? So typically things that aren't get reported to the bureau, utility bills don't get reported, right? Water, power, Edison, all that stuff doesn't trash, all that stuff doesn't get reported. You pay it every month, but it doesn't get reported in a positive manner. So what they say is, they say, hey, we'll let you self-report, they call it. You do a self-report and we'll start giving you credit on this, right? So you actually get the credit as if you took a loan out, which is good because, you pay all these bills just like a credit card. You pay it every month. My trash bill, I'm paying every month. My electricity bill, it's $300 every month. I pay it. My water bill, $100 every month. My gas bill, right? So there you have 4 bills that typically wouldn't be reported, right? Good thing. One thing, and it does boost your Experian, which is positive. But the one thing that you want to take into consideration is now that's being reported to your credit. Lenders will now see that as a debt, right? So they can say, we've had members try to apply for a loan and it has to go through a second review because now maybe their debt ratio is a little higher because now last month they had a high, during the summer, they had a $350 electricity bill, right? So now it's like, oh, that we add that into their debt. So it's just very important to really look at that as remember that yes, you're getting the positive of the reporting, but you can see a negative impact just on qualification because we now lenders that typically wouldn't see that you have a $350 electricity bill all of a sudden, or a $200 gas bill, whatever it may be, now is factored into your what we call debt ratio. So maybe you don't qualify for as much of an auto loan or as much of a credit card. So just think that through. You guys, if you have any questions, I know that one's a little tricky. That's a newer product that's out. So that's definitely one thing to take a look into, right? So we kind of talked into, how to maintain and improve. Now, what are some of the signs, right, that you have too much debt, right? Help, right? So there's signs that you want to look for, right? Sometimes you're just going through your day and you're just like, you don't realize it. All of a sudden you're like, man, I'm totally in debt. I feel overwhelmed. What do I do, right? So one of the key things that you really want to look at, and we talked about having an impact on your FICO score, is if you find yourself only making the minimum payment every month, right? Because with credit cards, they can add on. Remember, it's interest on top of interest. So if you're only making that minimum payment, all of a sudden your balance is just increasing. You're never paying it down, right? And now what you want to look at is lenders are required to actually give you a statement with in the bottom, if you make this minimum payment, it's going to take you X amount of years, which is forever, to pay this off, right? So if you find yourself not being able to put more towards this card, you used it, now you're struggling to just make that minimum payment, maybe you want to take a step back and say, okay, do I want to take out more debt, right? Again, max out credit card, right? That's a key sign, right? I maxed out, right? You go to swipe it and you're like, nothing available. Oh man, how did that happen, right? So those statements are generated for a reason, to really take a look at them, as well with so many different ways of e-statements and online statements and technology. You can pretty much stay very, very, very close on your transactions. Before, we'd have to wait till a statement came out and are these legitimate charges? Now you can literally, as soon as you make that card, if you have online banking or credit card, click on it and you see it post to your history, right? So you really want to make sure that you're not approaching maxing out that credit limit. That's kind of a huge red flag, not only on your credit, but you're going to see that have a factor on your FICO score as well. Another feature, right, is a cash advance feature. I'm not sure if you guys are familiar with it, but typically lenders will give you a cash feature on your credit card. It may not be the full amount. You have a $5,000 line, but there may be on your statement that shows you can take, 20, it's usually 30 to 40% of it out in cash, meaning you could request a PIN number, go to the ATM and take physical cash out instead of swiping. Because if you're using, cash from your card, there may be a shortage somewhere else, right? We get it. Life happens, emergencies happen, and you may need to do that. But it's very important to really determine, is this something that is taking you over, right? Am I doing this more frequently than not, right? So very important to look at that cash advance feature. Like I said, it's there for a reason, emergencies, things of that nature, but you really don't, if you find yourself always cashing advances, that may be a pretty big red flag. Another one, denied credit on purchases or anything. If you're, if you go, like I said, go to swipe your card and it gets denied because you're over your limit, or as well, you're denied, you're like, I'm at the mall and they cross-sell me, they asked me if I wanted a so-and-so credit card for a discount, and you go and apply and you're like, hey, all of a sudden I'm getting denied for these cards. What's going on, right? A couple months ago, I applied and no problem. Sometimes people wait for that indicator. There's a lot of things that obviously are coming at you when that happens. That means that something has shifted on your credit where when you apply, this lender looked at it and wasn't comfortable with lending you additional funds, right? So that's very important to if you applied for something, don't just, oh, okay, I got denied, whatever. We have people, oh, whatever, I don't want to look into it, right? Take a step back, maybe order a credit report, and take a gander at it and say, okay, what's changed? Or what am I having out of these things have changed? Am I using my credit too much, right? Am I over the limit? Am I doing, these little things that we talk about are transpiring, right? Is this something I need to slow down and say, hey, like what's going on, right? This is obviously calls from collection agencies. I know we get inundated with so many random numbers, I know on my cell phone, I get all these random numbers. If I'm not comfortable with that, I don't answer it, voicemail, everything. But, sometimes if you're getting a call and it's from a collector, maybe there's something going on in your credit report that you're not familiar with, right? So what's happening is, again, there's shifts. Somebody is saying, hey, you owe us money, calling back. And we see this as a key factor too in maybe fraudulent activity, right? You're like, I always pay my bills, right? Answer that call sometimes, or let it ring to voicemail, but check it, right? Is somebody calling and you're unfamiliar with that financial institution, or, it's like, oh, wait, I did forget to pay, or I couldn't pay, right? So you always want to have that hard conversation with a lender. If you are financially struggling, I always say, have that conversation. A lot of, I know like us at Foothill, when your financial wealth, when is healthy, our organization is healthy, our credit union is healthy. So we want to work with you through this process, but these are some red flags to tell you like, hey, what's going on, right? Another one, right? Has anybody ever lied to their spouse or family about purchasing, right? You're having Amazon delivered to the back gate instead of the front door, right? So maybe you're spending too much, right? If you find yourself saying, hey, I don't want to tell my spouse or my family that to deliver here because there's so many things coming, right? So maybe you find yourself taking a step back and saying, hey, I'm doing too many purchases, right? So because I don't feel comfortable talking to my spouse or my family about some spending habits, right? So you really want to make sure that if you find yourself, hiding things or having things delivered to the back gate instead of the front door, like typically, you really want to make sure that you're slowing down your spending, right? Because all of these things can really add up to really affecting your financial well-being. So it's very, very important that you really pay attention to these key factors, right? This is a huge one, right? You don't know how much debt you have. I can't even tell you how many times I've talked to people throughout my career and I say, okay, you're looking for this loan. Let's take a step back and let's go over your credit report. Let's talk about your debt, right? What's on here? What can we do? And I ask them, propose them with a question. What kind of cards do you have open? What kind of balances? If they don't want their credit report ran yet, let's say, okay, let's talk about your balances. Let's see if we can get your factors to support an additional loan. And they literally will be like, I don't know my balances. I don't know what I hold on my cards, right? They're almost scared to open the statement, right? They just make that minimum payment and keep moving, right? But I always say you always want to take a step back and look at your, if you want to do it quarterly, monthly, depends on how your comfort level is. Some people want to do it weekly. Some people want to do it monthly. Some people want to do it every other month or every 3 months, right? Evaluate their credit. And there's so many cool apps now that you can actually download your bills in for free. It tells you how many random bills you have from how much it's kind of a very eye-opening, application where it tells you how much you're spending on food, how much you're spending on, Netflix and Disney Plus, all these apps that you sign $10 a month here, $10 a month there, and your money's spread all over the place. And, it really puts it in light to say, wow, do I really need all of these things, right? Do I know my debt? And some people do it and they're comfortable, like, great, I'm financially where I want to be. Doesn't mean it's a bad thing that you're reviewing it. It's a good thing, right? And like I said, you take a step back at your debt and you go, okay, I have some extra money this month or not. Let's pay down to XYZ card because it's approaching maybe that 30% mark, right? Where it's taking you to start having a negative impact on your credit. So these are just some of the red flags that you really, really want to look at, from building your credit, maintaining your credit. This is a huge one to maintain that FICO score. So if you do find yourself in this situation where, there's so many different things, you find yourself just feeling overwhelmed, right? Beware, right? There's some things to beware of the scams, right? There's so many different scams out there. There's a lot of credit repair companies. They make some big promises that they're going to help you get your credit score up. You see commercials for it. You get calls for it. Letters in the mail over and over if they have access to some debtors, institutions' credits, and they send you, hey, we can repair your credit, right? You just have to do X, Y, and Z. A lot of these companies, they keep you in this loop because what happens, the first thing they tell you is stop paying everybody and we'll negotiate on your behalf, right? Because they think that when you stop paying, you're going to have more leverage on a financial institution to settle debt for less or make payments, less of a payment. But you got to remember, in that meantime, your credit's getting really, affected, I would say, because you're not paying, right? So yes, they may end up working something out for a letter of debt, but then it's very hard to get that credit back, right? So that's why I would say it's very important to reach out on your own before it becomes that to that point where you have to stop paying. Again, institutions want to work with you, right? But they do have to hear from you, right? Then another third-party company just saying, hey, they're not going to pay anymore. What can you do? So very important to really take a look at that. Beware of that credit repair companies. Another thing, rent to own. A lot of this was bigger before, but a lot of institutions, you would, rent and think, hey, I'm going to rent to own this TV, this furniture, or things of that nature. And they're going to report it to my credit and I'm going to build credit. In reality, a lot of those companies only report negative. They don't report positive. You have to read that small print. They won't report that you're paying because they have to pay to have an agreement with the credit reporting agencies. They only do the negative reporting because they want you to pay. So very important, if you're going to do something like that, take a step back, take a look at it. Payday loans, very, very, very high interest rates. I would almost call it predatory lending, where it's just, there's 30, 40, 50% interest rates. If you find yourself where you're hard up and you really need some money, they typically are going to, you're going on $300, you're going to end up paying double that or triple that. So it's just, it's just very important to reach out to your lender and see what your local bank or credit union and see if they can help you out with that instead before you have to go to that payday loan. High interest rate debt consolidations, right? Another thing is a lot of these debt consolidation companies, what they do is they say, hey, let's take all of your debt. What we'll do is we'll get you an interest rate, an intro interest rate at 3%. Right now, you're maybe paying 10% on this unsecured debt. Let's get you at 3%. But then in the fine print, it's for 12 months, or even as far as I've seen some rarely as far as like 18 months. But what happens is they're taking all your debt and they're putting it in one bucket at this low interest rate, but they're assuming that you can pay this off in that short amount of time. A lot of this debt we've had for years. So is it reality that you're going to pay it off in 18 months? Because then they set you up with a minimum payment that isn't to pay it off in that time frame. Because after you fall out of that intro period, you're going to fall into a interest rate that maybe be 20% or 25%. We see this a lot. We see a lot of members trying to come to us after the fact that, hey, I did this debt consolidation. They gave me a 3%. I was planning on paying it off, but things just didn't shake out that way. And now I'm paying 30% and my minimum payment, ended up going up and I find myself more in debt. So they're now trying to actually come to us and for something more competitive, but now with their bills they have, maybe they're late because that big payment. So it's put them in a financial strain where maybe we can't assist them at this point. We want to, but we maybe not be able to, right? So again, see what we do debt. We do consolidations where we will pay off other lenders at a lower interest rate. We have a budget balancer loan that is very powerful. We bring it over at a good interest rate and help you with that and combine that. If your factors support it. So just some things to be aware with so many options out there, but just if it's too good to be true, sometimes it's just that, right? So we always say read the fine print. What's going to happen after this intro period, right? Ask the hard questions because at the end of the day, you're responsible for that debt. Now, again, if you find yourself with those debt collectors calling, just know your rights, right? They can't threaten you, right? Debt collectors cannot threaten you. They can't publish your debt. They can't repeatedly call you, give you false statements, send things on government official looking documents, right? Though we're suing you on this, but then you look at it, it's really not, we can. So it's very important to just know if a debt collector, if you do find you in that situation, let them know that, once you tell by law now, once you tell a debt collector to stop calling you, they no longer can correspond with you via phone. So if you do find you in that and it's stressing you out and you're just like, calling you during work or, things of that nature, you have to just let them know, stop calling me, because at that point they have to stop calling you, right? Again, another huge thing that we see with debt collectors, they ask for instantly a check or a settlement. They say, hey, we'll settle it right now for X amount of dollars. Just give us send us a check. It could be post-dated. We'll cash it on when you get paid on Friday. If you don't have it now, I could only do this deal now, right? 9 times out of 10, every member I've seen write a post-dated check to an institution, to a collecting debt institution. They go ahead and transact on that check immediately because they go on that, hopefully you'll have those funds and they want to get it immediately. So then that could incur overdraw fees or things of that nature. So never get a post-dated check. Always do a post-dated check to them. Always get the offer that they do give you if they're settling in writing on their letterhead and signed, because that, if something does happen, that is your onus to say, hey, look, I got this offer, and ask them to remove it from your credit report. Don't just put, amount paid for less, because they'll put amount settled for less than the amount original debt. If they settle amount, they have the ability to remove it clearly from your credit report. Ask them that as part of the deal if you do find yourself working with them. So these are just some of the things that, debt collectors can't do. You have rights to that as well. There's laws in place that tell, if you ask these things, stop calling us, stop calling me, stop text messaging me, things of that nature. There's very much so government, laws that prohibit them from harassing you, I would say, from your payment. Their one job is to get payment any means necessary. So now that we've kind of gone through that, it's okay. I have done all this work, right, to get a powerful credit score, right? But then what happens is we don't do our due diligence about protecting your credit score, right? Just as important it is to build your credit, it's just as important to protect it, right? Because identity theft is very much out there right now with so many things online and so many easy ways to do it. We have so many, so I mean, you really want to make sure that you protect your identity. We actually have an account that has a built-in identity protection. So that's actually as part of an account feature. So there, that's a thing. If you're in the branch, ask, or I can get you that information if it is built out as part of your account. Another thing is monitor your credit score. There's so many ways now. Before you had to order it in writing and get your credit score. There's freecreditreport.com for your Experian, Credit Karma for your TransUnion and Equifax. They will actually give you highlights of any new transactions that have transpired, anything that's reported, inquiries. So it's immediate alert, because the longer it goes on, the more the risk is to really have a negative impact on your credit, right? Guard your information online, right? We see a lot of people have monitoring on their credit, but then they'll go to a website, and a random website that they saw, and put a credit card number, all their personal information, right? Without questioning it. So it's like, sometimes these are false websites, or they're not security protected, where they get hacked and all your information gets. So it's an unknown company. You really don't want to make sure that you're not putting your all your information on it. Verify them, see if there's been any, if they had any breaches. As we talked about, sign up for alerts on your credit report. As soon as your credit report's ran, lock your credit report. If you lock it, nobody can review it. These are all free things to you, and very common that you could unlock via your phone. And when you're ready to take on credit, click it, unlock it, then it lets me review it, then you lock it back up, right? We always like to say shred sensitive documents. This is another one. People do every one of these things on here, but then they'll rip up their statement, their monthly bank statement that comes, or their credit card statement in half, and just throw it in the trash can, right? And it's like, anybody can go in there and tape those together if you ripped it in 2 pieces or 3 pieces to 4 pieces, and have a good amount of information about you. A credit card number, your name, address. That's very minimal and easy access as that sounds to get. They can do a lot of information with that. So I always say, shred your information, shred it, shred it. We actually, at Foothill, offer a free shred day to our members, where you can show up. With COVID going on, you literally just open your trunk. One of our team members grabs the bag, dumps it in a shred bin, a truck that comes, and that all of your stuff is shredded, and that's just a member benefit. So very important to protect your credit information, just as important on building, because it's very hard to recover that, and it creates a lot of headache in the long run. Now, your rights and responsibilities, right? So you actually have the onus of actually getting one free credit report a year for free, right? You just write each bureau, and they give you a free report. But I always say that's you have that right, but that's actually too much, right? That's too long in between. Once a year, so much can happen, especially if you're not using your credit, not applying for credit. And then you go to buy something, and all of a sudden they're like, what's this and this? And you have no idea. Like I said, you have the ability to order it free, but as well, you can just go on to an online resource with freecreditreport.com. And now you don't have to give any of your credit card information or anything. It's a free TransUnion and Equifax as well is available to you. So, you can actually do that very quickly. Again, ask why. If something happens on your credit, or if you get denied for credit, ask. You have the ability to ask why, and lenders have to, by law, send you a written letter of why credit is denied, right? So read into it. When you get it, it's going to state why exactly your credit was denied, right? Don't just say, I didn't want that card anyway, or just throw it away. You know, open it up, take the time to look at it. Report violations, right? If something isn't right on a credit report, dispute it, right? And we'll kind of go into that, but you have the right to dispute information, right? And all you have to do is write to the credit bureau, TransUnion, Equifax, and Experian, and the bureau, the onus is on the bureau at that point, right? To actually prove that that's your information. So if something's not right, as soon as that they go from the date of that letter received, 30 days, calendar days, they have to prove that that is you and that is your debt, or else it has to be removed immediately, you know, within that 30 days, instantly removed from your credit. So if something isn't there, dispute it, or you're not happy with it. Institutions make mistakes. We're not perfect. So if it's not right, dispute it with the institution, or if not, go straight to the bureau, because it's the onus is on the institution to verify that that's right, right? Like we said, disagree with anything, write a dispute statement. It literally, all it has to say is, it doesn't have to be an essay. It could just literally be that I do not agree with this credit reporting, and I want the institution to show me when I was late or when I took that loan out. You know, it's literally just that, own and signed and dated, and the 30 calendar days start. So like I said, that's very powerful that you have that tool to dispute things, right? And even you can dispute online now. You go through again, freecreditreport.com, Credit Karma. You can literally, they do the dispute for you. You literally just click on, see an item, click on it, hit dispute, put I'm disputing this, and it actually has highlights of reasons you're disputing. Click one of them, and they actually send it digitally, and it starts right there. You don't even need to write a letter. So however your comfort level is, you can do it those ways. So just know that just because something's set on your credit report doesn't mean it's accurate or that it's forever, right? You can get that off of that credit report. So I know we kind of covered a plethora from starting to in between, how to maintain and how to improve. But we really want to make sure that you get the basics in place, right? You know, if you want to build that FICO score, pay all your bills on time. As simple as that sounds, I know it's not that simple all the time, but you really want to make sure at least if you find yourself taking yourself still over the limits and things of that nature, at least when credit bureau looks at it, or our financial institutions, we say, you know what, but at least the person is paying, the debtor is paying it on time, doing everything they can to pay it on time. They're going to be more willing to work with you, right? Again, as I just recently touched on, review your credit report for errors and corrections, because again, like I said, institutions make mistakes. So, but at the end of the day, it's your credit report, right? You want to know what's on there, and it affects you in interest rates and which translate into thousands and thousands of dollars in savings, right? Take the steps to really increase your FICO score. You know, take some of these things, and maybe you can't put them all into play as of today, but you know, take the highlights. You know, and what can I do based on the things we covered today to really, you know, improve my FICO score, right? Remember that, I really want people to remember, because this is the tricky one, is you remember that 30% utilization ratio is very important. So you really want to make sure that you're staying below that 30%. And you know, you really want to really take a step back and work on paying down that debt, instead of just taking on more debt and more debt and more debt down the road. So I hope you feel a little more empowered. Like I said, we covered kind of the gamut of from beginning, middle, and end, but there's a lot of stuff in between, and you know that I'm open for questions, and you know, whether it's via email or whether it's right now or calling me directly. This is my direct line. If you want to speak direct scenarios, I know you guys are members, and like I said, I'll take on all questions, as well as in-depth scenarios that you may be involved in, or somebody that you know be involved in, that you want to kind of tackle and get guidance throughout this. Because again, your financial well-being, when you're in a better place, your owners of the credit union, we're in a better place. So I just want to make sure and put that out there to everybody that attended this seminar, or somebody that wasn't able to, if they want a copy of it, or just reach out to me personally. that you know my contact information is there directly.
So Michael, we do have a couple of questions that came through during the presentation. And also this presentation will be emailed out probably late tomorrow to everybody that attended. So please feel free to share it. So you have that. But
Okay.
some of the questions that came across, the first one is, I have too many credit cards currently open. I don't plan on using most of them. What is the best way to close some of those accounts with minimal impact on my credit score?
So great, actually great question. We kind of touched on it a little bit, but one thing that you do not want to do is close them all at the same time. If you are going to close them, stagger them, because it's a huge shock to your credit report and the bureaus if you just automatically close 3 cards you're not using. They go, hey, what's going on, right? And you'll see that negative impact instead of a positive impact. What I would do is first, if those cards don't have any annual fee and you're not using them, and it's no harm to keep them open because it is keeping that history open for you and having a positive impact, I really wouldn't close those out. If it's really something you don't want to be tempted with to have it, you stagger the closing them out, maybe one every quarter, one, and then 3 months later, another one, and then 3 months later, another one. Start with the ones if they do have annual fees, because you really want to start with those ones. Sometimes at the beginning when we're building credit, we had to open a credit card with an annual fee, right? Start with that one because now you've built your credit and you no longer need that card. So I would start with obviously the ones with the annual fees. But if you don't need to and you're not tempted with using that card, it's having a positive impact because of all those factors that we talked about. I would keep that open to be honest with you, but if not, stagger them. So don't close them all at once. And like I said, maybe quarterly, one every 3 months until you get to a point where the ones you're not using are closed out. I hope that answers your question.
Good answer there. I have a couple of those. Didn't know what to do myself.
Mm-hmm.
Okay. The next question is, what is considered a small loan? In other words, how much money do you consider a small loan?
So a small loan is, the minimum loan that we do is $500. So that's considered the smallest loan that us as Foothill Credit Union offer. So that's the smallest loan that we offer. Our lines go as high, unsecured debt as high as $25,000. So you see, and everything in between, as well as a large loan, auto loan being up to $100,000 and mortgage loan up to 500 and plus, right? So so a small loan to our organization is 500, and that's usually the starting point on all credit cards is 500. It's rare to have a line under. There's could be some like kid credit cards or things that 60 and above credit cards that have like a $200 limit or a parent set limit. But $500 is considered in the industry the smallest line, I would say.
Okay, that looks like all the questions that have came through, except a thank you to you for some great information that you shared with us all tonight.
Perfect.
So once again, thank you everyone for joining us tonight. We hope you got some valuable information. Like Michael said, he's always here to answer questions for you. And this presentation will be sent to you to the email that you had registered with late tomorrow, early Friday morning. So, oh wait, another question. We got one more that just popped through.
There we go.
Sure. It says, I've been trying to build my credit by trying to apply for different banks to open credit cards. What would you recommend that I do?
So one thing, again, you don't want to apply too many places. I know in the question you said applying at different institutions, because that's going to establish hard inquiries on your credit. So lenders are going to look like it's going to look that you're applying for credit everywhere, right? So what I would do is, one, if we talked about that secured credit card, if you do have funds to secure it, because that's going to be a lower interest rate, very low interest rate that we give you in a card form, report to the bureau to build that credit. But as well, if you're, I'm assuming you're currently a member with us, as long as you're currently employed for 6 months and above, you don't have to have a FICO score. We will, possibly lend you, the minimum amount and based on your income. But the very powerful thing is with no FICO score, a lot of institutions will penalize you with the highest rate possible because there's no credit to evaluate it on. So they may give you the F credit or the D credit. We actually give you the C credit rate, which is right in between on good faith, saying, hey, we want to set you up for to have a positive impact and not set you up for failure with a 20% interest rate because you don't have credit. So you definitely would be somebody that I would love to have a conversation with and kind of look at your current employee. What can we do to assist you in achieving that with not enormous interest rate from some of these stores or banks, because maybe you don't have a FICO score, you're looking to build credit. So like I said, my contact information is there. And then we could possibly get you into something, a smaller line like we talked about, but we're giving you the benefit of that mid credit score rate. So then you're not having to pay these 20% and 15, and higher interest rates.
Okay, that looks like it. Oh, sounds good. I will contact you via email. So you'll be getting an email shortly. Well,
Perfect.
Great. We're glad we could help you.
Awesome.
All right. Well, thank you guys once again. I hope everybody has a wonderful evening. And thanks, Michael. And then we'll look forward to the next seminar that you'll be presenting. We'll probably be working on one for auto buying. So that'll be the next one.
Perfect. Thank you, Stacy, for housing it. And thank you, everybody, for attending and spending the evening with us. We appreciate your membership.
Yes, thank you. Have a great night, everyone.